Welcome to another episode of Financial 15. Kevin and I are tackling LIRAs today, locked-in retirement accounts. What are they? How do you access the money? Lots of good questions there. We're going to provide a couple of answers. You want to stick around.
Yeah, that's great. To find more content on anything that we've been doing in the last little while, or our webinars or stuff along those lines, please go to our website at beckerroar.com or subscribe to our YouTube channel or like us on our Facebook page. So let's start this off. Clint, what is a LIRA?
That's right. Lots of acronyms and jargon in the financial world, and LIRA is certainly top of that list, locked-in retirement account. So it's not an RSP, it's not a TFSA, it's a different item. How you get a LIRA has to do with pension accounts. So if you're working for a company and you contribute to their pension, then you decide you move to a different company or you retire, however it happens, likely that pension is going to be pulled out and it'll be turned into a LIRA. That's the account it goes into, a locked-in retirement account. Now, they're governed by legislation, and this is where it gets complicated. It could be a provincial legislation or it could be federal legislation, and depending on the province the company registered the plan, it could change. So there's lots of details here, Kevin, but why don't you walk us through a few more of those points?
Yeah, exactly. I mean, as you mentioned beforehand, it may not be called a LIRA. It may be known as a locked-in RSP or an LRSP. It's a variety of different names, but they're all the same sort of scenario. One thing important to remember, as Clint said, it is pension money, so you cannot contribute to a LIRA, unlike an RSP. You do have full control over your investments, though. So there are some similarities between the two, but there are also some differences. The one other thing that you've got to know also is, even though you cannot contribute, you can also not withdraw. There is a special process of converting your locked-in retirement account to something different, basically to a LIF. And it has to be done by the end of the year in which you turn 71. But there are exceptions. You can convert some of them earlier. And again, this has a lot more rules than what the RSP was, but that's a good place to start.
Yeah, it gives us a quick overview there. It's locked-in account. And then there's a few common questions. We're going to get into them here. The first one, I'll throw it up to you here, Kevin. What can the money be invested in?
Yeah, well, basically, when we start looking at the investments, this is considered a registered plan. So like an RRSP, like a RIF, like a TFSA, like an RESP, those are all considered registered plans. Anything that you can contribute in your RSP, you can contribute into in your LIRA. So it's the same scenario. You can go stocks, bonds, mutual funds, a variety of different investments that are allowed in there. But yeah, the investment side of things is the same as you would for an RSP. So not strictly cash or a savings account. It is basically a full investment account that you can deal with.
Yeah, lots of acronyms there. RESP, RSP, went through the whole alphabet, financial soup. Another question here for the LIRA. How do I access the money? This is a big one. It's a little more complicated because, as you mentioned earlier, it's pension money. So it's not just regular savings. It's not an RSP. It came from a pension. It goes into this locked-in account. So there's a special process on how you access that LIRA. And now it does vary depending on the legislation. And a key point here is legislation isn't where you work. If you worked in Ontario, it doesn't necessarily mean you have an Ontario plan. It depends on how the company set it up. So if it's a big company, they may set it up based on Manitoba legislation or Quebec legislation. It could vary. So we're going to go through the rules for Manitoba, then we'll give you an overview of some of the other provinces, but keep in mind it will vary depending on how the pension is set up. Now for Manitoba, you can see the rules on the slide there. You have to move it from a LIRA into what's called a LIF, a life income fund, to take the money out. That shift, that transition requires spousal consent. They have to sign forms allowing that shift to happen. It goes into that LIF. You can do it any time you like, LIRA to LIF. However, it has to be in a LIF by the time you turn 71, by the end of the calendar year in which you turn 71. And then the withdrawals, you went from LIRA, the money's now in this LIF. The withdrawals from that are governed by a formula. So you can't just take whatever you want. You have to follow a formula for the withdrawals from the LIF. What are some of the other points, Kevin?
Yeah, and again, you can unlock additional amounts if you're a non-resident or you have a shortened life expectancy, financial hardships. I mean, basically, this is meant to be your pension moving forward. So the government wants to make sure that you don't use all the money up by the age of 75, but that at 95 or 100, you've still got some money left. But again, as we mentioned, there are certain precautions where you could be able to get more access, just depending on one of those things. And another important one that's come up over the last number of years has been that there is now known as a one-time 50% unlocking. You must be the age of 55 to do it, but you can get into what's known as a PRIF, which is a prescribed registered retirement income fund. The PRIF acts exactly the same as a normal RIF was. So whereas the LIF has a minimum and a maximum, the PRIF has a minimum, but no maximum to it. So a lot more flexibility on that withdrawal. And as you mentioned earlier, a quick point is that it varies from province to province as to what it looks like, also varies federally. So if you're working for, say, one of the big 6 banks, that is a federal pension you will have, as opposed to, say, a Manitoba pension, even if you're working in Manitoba. So those are a few quick points to look at it. What else can we talk about on this one?
Yeah, and on that PRIF, which is an important aspect, you have this locked-in account. You can unlock half of it. That is specific to Manitoba. Other provinces have variants of that, but that's not across the board. And then how you access the money, this table here has got some small print, but it shows you a few of the details. So you have that LIF, you have that PRIF. The PRIF has a minimum. The LIF is going to have a minimum as well as a maximum. How those are determined is based on a formula. It gets updated every year. You can see some of the data here, and they have lots of columns, but they show the first column would be if you had a LIF from Alberta, BC, Ontario, New Brunswick. You can see all the provinces. You can see the other column here has Manitoba, Nova Scotia, Quebec, and then the last one has the federal numbers. And you can see how it changes year to year depending on age. So just keep in mind there's a formula. These tables are publicly available, but that's what governs your withdrawals. You have to follow the formula. The LIF has a minimum and a maximum. That PRIF, that unlocked component, only has a minimum. So it varies every year, and then we'll do a quick overview here, Kevin. We're going to walk people through this. This is what some of the rules would be like across the other provinces as well as for federal legislation.
Yeah, we're getting a whole bunch of different scenarios. So, I mean, each province has set up similar rules, for expected life or shortening of life expectancy, as it were, financial hardship, lump sum unlocking, things along those lines, and what ages you can do this at, when you can convert. Now, they're all under a similar program, but they all, as you can see, have different scenarios. If I'm in Manitoba, I can convert at any time, but if I'm in BC, I have to do it at age 50. And again, in regard to lump sum unlocking, I can do that on Ontario, but I can't do that in Saskatchewan. So again, it is very important to know which legislation you have, and that's what you'll follow when you're dealing with your LIF and or PRIF going forward. So we've got a variety of different scenarios coming there, and it's not just the provinces, also the territories. The territories would be considered the same as the federal would be. So these are just a few of the options that are out there. What else do we have for it, Clint?
Yeah, so we tackled the question there, how do we access the money? I appreciate it's a little more complicated, but there are steps in place to help you get through that. Another common question here, Kevin, is how is it taxed? Well, we figure out we now have got this LIF, we got this PRIF, we're getting the money out. How is it taxed, Kevin?
Well, the tax is basically the same as you would get out of a RIF, and it is pure income to you. So anything that you take out of there is exactly what you're going to list as income. So if you can take out 10 grand, that goes onto your taxes at 10 grand of pure income to you. No dividends, no capital gains, no tax treatment that's better, just that you've had it sheltered for a long period of time. And that leads us to a variety of different questions as to when do we want to take it? What do we want to take it like? Clint, when do you want to take this?
Everyone's going to be a little different with their financial plan, but ideally, this would be the first pot you try to draw down. It's locked in. There's restrictions on how you access it. It's fully taxable. So ideally, you try to draw that one first. So if you had an RSP, a LIRA, and a TFSA, I'd say try to do the LIRA first within the limits, then the RSP, and then the TFSA would be your last bucket you typically touch. So the LIRA is normally the first one. When it comes to retirement, when it comes to drawing the income, you typically try to get rid of that LIRA first because of all the restrictions involved. Any last comments, Kevin? Anything you want to add?
Yeah, there's a couple of quick points. Again, this is a very complicated sort of scenario that it can be. So, I mean, by all means, if you have any questions on LIRAs, if you have a pension you're looking to transfer, please get in touch with us. So that's going to be a big one. But some of the things that we should take a look at are that you can have more than one LIRA, depending on whether you've left pensions from somewhere else. That's one thing that goes on, and we must know about how that plays. And each one might have a different provincial jurisdiction or a federal jurisdiction. But yeah, other than that, I think we've covered a lot of the basics for you. And otherwise, I've done with what I want to talk about.
If you have questions, it is a complicated subject matter. Just let us know. You can see on the bottom of the screen the website, chatwithclintonandkevin.com. That's a part of our website. There's a contact form there. We'd love to hear from you, help address those questions. And we like to do these videos on a regular basis. We'll be back again next week with another video. Until then, everyone stay safe and take care.